strong leading position there with Magnus EX. And coming to high speed, one with primers that we launched and now getting completed with NXG, we would have a representation across all the four segments. On the three-wheeler side, one segment where we've not been represented is the electric three-wheeler L5 format, and that we launched an electric cargo last month, and passenger we should be launching anytime over the course of this quarter itself. So that fills the electric three-wheeler, both cargo and passenger segments. So that will now give us, if you look at Greaves Electric Mobility, a full representation across all the customer segments in both two and three-wheelers, and both for B2C and B2B play.
Got it. Thanks for that elaborate explanation. Just one last question on the electric mobility side. Now that the same thing is kind of getting settled, and are you looking at some aggressiveness towards your campaigning or the marketing, or some changing in the model? What are you kind of trying to gain market share here? What else are you working on?
Yeah. So look at our current position as I get into this. Three basic facts and three initiatives, if you see. The three basic facts are that even without subsidy now running for 8 months in a row, Greaves Electric Mobility continues to be amongst the top 5 electric scooters in the country in terms of its market share. Look at our YTD market share, it's close to about 7%. I'm talking about YTD as in now. Yeah, it's close to about 7%. Right. And that's and then we can with subsidy getting restored, hopefully it has enough resilience, because subsidy will be to the tune of about, and added 15% does make us more competitive in our product price proposition in the market. So that would be one key thing, and specifically to your question about regaining market share. So that gives us resilience in the market there. Added to that, there are both initiatives on products. One, new variants are being launched, and second, new products are being launched. One variant that has just got into the market is a variant of Magnus, our flagship product, Magnus EX. That's Magnus LT, which is still in the city speaks segment, but it attracts a different kind of a customer. And the second one, which is a new product and will attract a new customer segment altogether, is the launch of NXG, which is a high-speed scooter. So these are some of the things specifically in two-wheelers. If you see, these are the products that we're launching, and I already talked about three-wheeler fully fulfilling the product. In addition to that, I think there is, and the point that you made on additional marketing spends and all that, I think we will continue to stay extremely capital efficient in our marketing right now, given that it's still a nascent category with low penetration. So we will be a lot more digital and direct marketing focused, and we will evaluate from quarter to quarter as to when is the time to go and really start increasing our marketing dollars. So, but the ROI in terms of marketing will remain very, very high priority for the company.
Thank you. Sorry to interrupt, Mr. Duggal. May we request you to rejoin the question queue for follow-up questions. Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to one or two per participant. If you have a follow-up question, we would request you to rejoin the queue. Thank you. Our next question is from the line of Rishikesh from Robo Capital. Please go ahead.
Yeah, hi. Thank you for the opportunity. So my question is with respect to our EV two-wheelers and three-wheeler volume. So how do you see the volume growth going ahead from Q4 onwards and for coming 1 or 2 years for both two-wheelers as well as three-wheelers?
Again, I think it's a question about forward guidance, both in terms of market and specific portfolio. And as I clarified, we don't have a policy. As per our policy, we will not be able to give you forward guidance. But I think the current trends are indicative enough. Has, as you've seen, in two-wheelers slowed down a little from the earlier kind of accelerated growth gradient, but we expect this continued kind of a growth there. And in three-wheelers, you've already seen that market is at about pre-COVID levels. And from here on, I think we will have to see as to how, depending on many other variables which are yet unknown, like incentive schemes and government things and PLIs, how they play out. So we are in no position to give any speculative forward guidance on this.
Okay, but I think if I have to see quarter on quarter, both two-wheeler as well as three-wheeler numbers, the growth they have dipped the numbers. So how do you see them going ahead? Like do we see them bouncing back to our previous numbers from next quarter onwards or from coming few quarters? Can you please indicate?
Again, it's a forward guidance in a way. Yeah, in a different way, you're asking the same question there. I do see the numbers that you're talking about, which is that in the three-wheeler segment, you're seeing plateauing of numbers. Both in L3, actually, there has been a decline quarter-on-quarter. I'm talking about the industry numbers. And in L5, again, there is a very marginal low single-digit growth that you've seen in quarter 3. So that's the current trend there. Yeah, if you look at the January numbers, they are no better. It's pretty much a flattish kind of a trend. So at best, the published numbers are January, which I can talk about. And even in two-wheelers, the market has been pretty flattish. If you see the January numbers, if you look at the trending, the MRR, converting into QRR, and January is about 81,000 registrations in electric two-wheelers, which is almost equal to the 240-odd trend that we've seen in quarter 3. So the published number is the best guidance I have at this stage.
Okay, got it. No problem. Thank you.
Sonal Minhas, your line has been unmuted. Please go ahead with your question.
Hi, this is Sonal Minhas. I hope I'm audible. There was some problem in the line earlier.
So your line is not clear. May I request you to use your handset, please?
Is it better now?
Yes, sir. Please go ahead.
Okay. Sir, I had a question on the e-mobility business. Given the EBITDA loss and the cash burn in this business, hoping it's going to improve from here on. But from a financial prudence perspective, and maybe some internal workings, I am presuming so, like what is the level to which this business can bear the losses given the cash balance? And from a timeline perspective, what is it that these are near-term milestones you want to have for this business to break even and cut the EBITDA losses?
Yeah, so this is again a very strategic kind of a question in terms of, look, the first thing is to, with subsidy getting restored going forward, we need to start showing resilience in our market share. That's going to be the first metric that the management team will look at as to how can we come back and start showing a rebound back into market share. And as I had mentioned in the earlier answer, that we still continue to be having a strong position in overall electric scooter segment with good traction for our products. So that would be the first matrix there. Second is going to be some of these new products that we are launching. We'll have to have that matrix in terms of looking at how they can contribute. And given that they will be addressing largely a new customer segment, that's going to be a delta on top of the existing rebound that we are likely to see going forward. So that's going to be a delta sitting on top of it. And all this with a double-digit gross margin and good contribution, healthy contribution margin, even without subsidy today, is only going to add up and show a road to profitability specifically that you are mentioning about. So I think these are the two initiatives that are currently there. Beyond that, there is a strong improvement in our overall cost position over the last 3 quarters, and that will continue to keep adding fuel to the entire profitability roadmap. So I would just leave it at that at this stage.
I understand that, sir. That's it from my side. Thank you.
Thank you. Our next question is from the line of Kapil Agarwal from Daksh and Associates. Before you go ahead with your question, sir, a reminder to all participants, you may press star and 1 to ask a question. Please go ahead.
Yeah, thanks for providing the opportunity. I just want to know what is the status of FAME subsidy for Ampere, number 1. And number 2, what kind of response we are getting?
Use your handset, please. Sorry to interrupt you. Your voice is muffled, sir.
Yeah. Now can you hear me?
Yes. Okay, go ahead.
Yeah. So my first question is, what is the status of FAME subsidy for Ampere? And the second question regarding what kind of response we are getting from that Nepal market in terms of volume and pricing, all that.
Okay. So to the first question, and as you heard Akhila clarify in the subsidy clarification that he gave, we refunded the subsidy amount to MHI on 27th of October. Mm-hmm. Anti products were taken up by the authorized testing agency immediately after that for FAME scheme recertification. Okay? Mm-hmm. And our flagship scooter, Magnus EX, has already been recertified for FAME 2 eligibility in December month. And now we are expecting other models to get certified soon. We are awaiting the MHI's approval at this stage to be regularized on the FAME scheme soon. And this will happen by actual activation of the electric two-wheeler products on the NAP portal. So that's the status, number one, answer to your number one question. To your number two question on Nepal, we have sent 80 Primus vehicles in the last quarter to Nepal. And that's the one partner dealer that we have, one of the largest firms in Kathmandu. And we've already started retailing the scooters there. About 20 of them have already got retailed out in the last about 4 to 6 weeks that the scooter has hit the shores of Nepal there. And we expect this to continue growing as we go forward. The pricing is extremely competitive. In fact, it's the same pricing converted for Nepal currency that is equivalent in India.
Okay, so approximately by when we can say that our FAME subsidy will be, we can say, started for our two-wheelers? Any timeline or any, if you can, no.
We're in no position to give a timeline. We are just, as I told you, we await MHI's approval. So, but we are not in a position to give any timeline today.
Okay. And any other plan for, we can say, any other overseas market to tap any other overseas market in near future like that?
No, at this point of time, we are in talks with some markets there, but at this point of time, nothing firm for me to commit at this stage.
Okay. Thank you.
Thank you. Our next question is from the line of Anubhav from Prescient Capital. Please go ahead.
Am I audible?
Yes, sir. Please go ahead.
Sir, are there any fundraise plans for GMPL in the recent future, given cash has gone lower and it's still a loss-making business in the foreseeable future? So, are there any near-term fundraise plans, or are we even considering sort of an IPO for this year?
Thanks for the question. Akhila here, let me take this one. So Greaves Electric is obviously here for the long haul. They are currently in the process of developing various new products, both in the two-wheeler and three-wheeler category. And the management and the board, essentially the board will take an appropriate decision as and when required. I hope that answers the question.
Just as a follow-up, do you see enough runway given the cash on books and given product development spending and all, and given the losses, do you see enough runway for the cash on books?
As of now, we do have sufficient runway, and the board is actively seized of this matter and will take an appropriate decision.
Good. And did we apply for the PLI scheme for the EV business?
Sanjay, you want to take that?
Yeah, I'll take that. So we are not part of the PLI scheme, auto PLI.
Okay, good. And sir, in terms of the
may we request you to rejoin the queue, sir, as there are several participants waiting for their turn, sir. Thank you. Our next question is from the line of Faisal Zubair Hawa from HG Hawa and Company. Before you go ahead, sir, may I request all participants to press star and 1 if you want to ask a question. Thank you.
So, sir, in the repeated questions about the electric mobility, the original business of our power generators and that gets largely ignored. So how are we doing in that business, and what is the kind of R&D we are trying to do to be much ahead of competition, and because Cummins seems to be doing very well, and how are we placed against them now?
So let me take that question.
What are the kind of ROC and ROE that we have in that business?
So in terms of the products and the offerings, first of all, we have a diverse set of applications where we are selling our engines as well as our components. And the applications range on the way from auto to pumps to gensets, and now to the components of various engines irrespective of the fuel which is used for the engine. That's one line of growth. In terms of the others, we are looking at enriching our product mix through new product development. So fuel agnostic engine designs is a new product area because of the changing landscape on emissions. So our entire genset portfolio, for example, is CPCB 4 compliant, which is the latest compliance norms on this application. Similarly, all our engines for the automotive applications in three-wheelers are also compliant to the latest norms that are there, that are prevailing in India. The third area of work is new customer acquisition, because our portfolio across Excel and engines opens up a larger landscape of potential customers for our products. That's the other dimension we are looking at. And all of this is also linked to a growth in exports, where we've got customers across EU as well as US, where we are selling both engines as well as engine components. And this is underpinned with a higher capacity utilization of our current asset base, which is now up in the high 80s and 90s. And that is also giving us a decent amount of operating leverage. We have a fairly high degree of ROC in the business as a result of all of these actions. Needless to say, the cost focus is also very intense in terms of both the design of BOM and the design of engines and components that we are doing.
So do you mean to say that our capacity utilization is around 85 to 90%? And how are we doing on orders? Is the industrial revival and the capex cycle also boosting our orders?
So the capex, we have a complex set of manufacturing facilities, which is a combination of assembly lines as well as manufacturing. So the bottleneck areas now there was a lot of work done on debottlenecking and increasing capacity utilization, which has happened internally, which is why we have created a fair amount of additional capacity, which we are able to cater to the next tranche of growth. So we are very thoughtful about how we spend our capex. And so we don't have a challenge in terms of meeting spikes in orders or increasing orders. And we have enough of an asset base to be able to do that without incurring very, very heavy capex.
Would it be a right statement to make that, now most of our divisions are like, firing on all cylinders, and it's only this, FAME subsidy which is causing some kind of problem for us? And also, sir, on many Concalls previously, you have referred that you would like to build up an entire ecosystem of ancillary suppliers for our electric scooter. So how far progress we have made on that, and are there people ready to invest money for us on a standalone basis to supply to us, so that our capacities can move up substantially as and when our profitability comes in?
Okay, so let me start. I think there were multiple questions there. I'll attempt. So I think the first part is multiple businesses firing. I think that was the first part of the question. If you look at our strategy several years ago, right, we went from a single fuel, single customer, single industry to multiple revenue streams, which is Greaves engineering, which is components, both in the auto, non-auto, as well as construction of highway equipment now with the addition of Excel. So the addressable market increased there, right? And yes, both on the engines as well as on the Excel side, you're seeing the margin improvement and the revenue growth, aided both by domestic and some exports. Now coming to retail, you've seen the spares and the services part, and that's again, the CFO talked about the margin growth in both of these businesses. Greaves Electric Mobility, obviously, Mr. Bale has shared a lot of the details into that and the short-term challenges that business face. So clearly the businesses have moved from a single business, single fuel, to multiple businesses, multiple revenue streams, and both between B2B and B2C, thus moving towards a strategic focus of getting closer to the consumer, doing both B2B plus B2C, and leveraging life cycle value extraction over the value chain. And I think that's kind of what you're beginning to see, which is part of your next question, which is the ecosystem effects. When you look at, while the component play is done out of engineering, high-end engineering, precision component manufacturing, supply chain capability exists out of the first core. Retail is the post-purchase solutions, which has the spares, the service, the aftermarket sales. In between, of course, you sell the vehicles through electric mobility. Then, of course, we have two small enabler businesses, the Greaves Finance, which enables the financing of EVs, and technologies, which helps develop advanced technologies into some of these engineering divisions. So when you look at it, aided by the 20,000 odd mechanics, 10,000 odd retailers, pan-India presence, and growing capability between mechanical to mechatronics to electronics to sensors, that capability expansion, we are moving from an industry which is a metal bashing industry to over to a lot of the mechatronics and then the software part. So I think that skill set addition is also happening as part of this transition. So I think that's kind of what you're seeing. Hopefully that shows why it's multiple revenue stream, it's diversified across fuels, across industries, across geographies. Hopefully that addresses your question.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to the management for closing comments.
Thank you all for joining. Much appreciate you taking the time this afternoon. Obviously, our management will be available for answering any questions offline through our respective coordinators. Thank you so much. Have a great day.
Thank you. On behalf of Greaves Cotton Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.